Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can listen to all of our terrific podcasts at americastalking.com. To support Everyday Economics, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Independence Day 2023. Joining me as always is my friend and partner, Dr. Orphe Divounguy, PhD economist. Dr. O, in our last podcast episode, we talked about the first half of 2023, what we thought might happen, what actually happened. I'll just say this. I feel like you were steady from the beginning, and you did at the very beginning say, let's wait and see, because a lot of people were panicking. And here's the thing. In the business that you're in, as an economist, memories are short. Attention spans are short. So there are a lot of economists that will hype things one way or another. There are a lot of people who pretend they're economists on the internet, pretend that they would have some sort of background in economics and make hyperbolic forecasts about this, that, and the other. That this is, flames on the videos behind them and things like that. And, fever charts, the red arrow pointing down, and all in the name of getting some attention and getting some clicks. When you and I started doing this, part of what we wanted to do was to bring some level of reasonableness to a civil conversation around what's happening in the economy so that people who are not experts can have some insight from an expert to understand what's happening in the economic world and the economic world that they're participating in, because the economy is composed of fill in the blank.
Just a lot of people. The reason why you have a lot of craziness out there is that I think some people fail to understand that there's a balance, and it's never going to be too far to the left or too far to the right. So whenever I hear these extreme forecasts, I always start to question things a little bit. I question the forecast, right? For example, you heard that the housing market was going to crash. And we said on this podcast that was just not going to happen. Because basically when prices go down, people come in, right? You got to think about these effects. Like, the fact when prices go down, people come in. You look at the labor market, with inflation coming down, if nominal wages are not taken down as fast, real wages are increasing. And so people have more purchasing power. And so that there's an offset happening. I think that's what some of these forecasts were missing. We said the U.S. economy was going to cool, but we didn't believe the U.S. economy was necessarily going to end up in a recession. And so that's exactly what's happening. As the U.S. economy is cooling, inflation's coming down, people have a little bit more purchasing power, and they're able to continue spending.
Second half of the year, I want to get to that. Fed Chief Jerome Powell has telegraphed the fact that there probably will be 2 more increases. You and I have speculated that maybe they'd be a 1/4 point apiece. In the last episode, we were talking about, the concerns of the first half of the year. One of them was that the Fed would over-tighten. And so that remains to be seen. What do you anticipate happening in the second half of 2023? Of course, 2024 is a huge year. We're back into a presidential election cycle. Some would tell you that we're already in the presidential election cycle now. But what do you anticipate coming from the economy in the second half of the year?
So I anticipate the U.S. economy is going to continue to slow. Growth will slow, but we will continue to avoid a recession. The reason growth will slow is that you have these headwinds ahead of us. You have, first, with core inflation where it's at, the Fed's going to continue to tighten, right? We know they're thinking 2 more rate hikes. So that's the first reason. The second reason is you have excess savings. We're still out there, are dwindling rapidly at the bottom. They're gone pretty much at the bottom of the income distribution for households at the bottom of the income distribution. They're dwindling rapidly for households at the top of the income distribution. You have the student loan repayment restart. That's also going to be, people that have gotten used to not having to make those student loan payments anymore. That's going to zap a little bit of their budgets. And so that's going to slow down the pace of consumer spending. And then potentially you have lending, bank credit conditions that might have to tighten a little bit. I say potentially is because we really haven't seen the big credit crunch yet. But we know we have this commercial real estate, especially in the office space, as a potential signs of trouble there. I expect bank lending to tighten. And so if you put those things together, you're likely to see a little bit of a cooling in consumer spending for the second half of the year. And that's good news for the Fed because it just means, core inflation will come down and we might actually be able to lend this plane, and lend it softly, avoiding a recession. That's my favorite outcome. But the most likely outcome is a Fed that gets anxious and hikes too much and sends the U.S. economy in a recession, right? Because historically it has always done so. To me, that's the most likely outcome.
That would make next year, the backdrop of next year, very interesting. Certainly nobody's rooting for that, but it does appear, based on trend, the stock market has gone absolutely crazy. I'm concerned about that. I just feel like the optimism and that, when I think about the stock market overall, I view that as the optimism around largely U.S. business and the U.S. economy, the intertwining of those two. And I think that what we've seen there has been just a little bit, not to say unsettling, but surprising. I mean, if you're in it, you're the beneficiary of it. If you're not in it, holy moly, it's like you missed the train again. Any surprises to come? What do you think might be the one thing that people should look out for as an indicator in the second half of the year, where that might signal all clear or trouble ahead?
Honestly, I don't really know. I think the best answer to this question is you got to pay attention to just about all of the economic data that's come in. I mean, I would, of course, the inflation numbers, but that's kind of coming with a lag, right? So I look at like the ISM, manufacturing and services, for like a pulse on the economy. I think those leading indicators are really, really, really important. And then you have the credit card company, you have the MasterCards, and they also keep track. They have their consumer surveys. They keep track of the health of the consumer because ultimately it's the consumer who's driving this economy. The consumer is in the driver's seat. Everything the Feds try to do is basically to bend the consumer to its will. And the consumer has been able to stay resilient because it had accumulated savings, because it's sitting on record home equity. But ultimately, it's the consumer I pay attention to. And, of course, the Fed is paying close attention, but the Fed has historically been known for making that mistake of just taking it too far. So, you look at the housing market, for example. Some people say the Fed had no impact, right? And I disagree. I mean, I had a reporter ask me the housing market is picking up again. Is the Fed having no impact? The Fed had a massive impact. Demand fell in 2022. And I would argue even that demand today is still very, very low. And that the reason why prices, rebounding is because of the decline in supply. And that, right, the fact that you have fewer listings coming on the market. But look, with that said, I think demand's still somewhat higher than what it was before the pandemic because of demographic factors, right? More people wanting to move because of their, family size, et cetera, right? So demographic factors are pushing demand. But compared to where we were in 2021, at the peak of the housing boom, demand has fallen tremendously. So I think the Fed has had a massive impact, contrary to what a lot of people think. And even the reason why supply has been so low in 2023 is partly because of the Fed. You had higher mortgage rates have pushed many existing homeowners to the sidelines. But at the same time, you had builders, housing starts fell by 10% in 2022. Builders pulled back a lot. Now the good news is builders have finally made their way back and are starting to build again. But I think I think the data shows builder pulled back a lot tremendously. And that's what's keeping prices somewhat elevated in 2023. And we're now starting to see forecasting, higher house price growth for 2024 going into 2024. So the Fed is having a huge impact. It's not like, some people think, oh yeah, we're just in restrictive territory now. So we're finally going to see. No, the Fed has had a huge impact. Look, inflation was near 9%, if not a little above 9%, just only a year ago. Okay. So we're a year later, we got inflation down in the 4% range. in the CPI, right, in the 3% range now, or PCE, 3.8%. I can't remember which. I mean, we've made tremendous progress on the inflation front. And that's because the Fed, I don't think a lot of it, yes, supply chains, improving, but the Fed has definitely had an impact. And it's likely to continue to have an impact. When you have Raphael Bostic coming in saying, hey, maybe we should pause a little bit and let things play themselves out. I don't think I think that's wise advice because, we have those monetary lags still to come, right? If we've managed to bring inflation down from over 9% to under 4% in a year, and we still have lags, and we weren't really, really in restrictive territory until recently, and we still have lags to come. I think slowing the pace, maybe more hikes, but slowing the pace is wise.
Appreciate the thoughts as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.